Traders, what's going on? Welcome back to another video. I hope you're all having a great day so far. Now, today is a good one. I'm going to be breaking down a few of the key principles that I did back in 2015 to achieve consistency and what I feel had the biggest impact towards that consistency. Now, this is not only things that have worked for myself, but also a lot of students at Rise and just some of the traders that I've worked with over the years. I've seen them do really well from implementing these things. So if you are inconsistent, break even, or a newer trader, I feel like this video will really help you and you should get a lot of value from it if you go away and implement it. Now, I want to start things off with a little bit of a common sense one, right? And this is going to be commitment level. Now, what I have noticed over the years is a lot of people love the idea of the trader lifestyle. However, to do the work day in and day out and treat this like a very strict running business is quite hard to do for someone who doesn't really love trading. So my biggest piece of advice to you is you need to figure out, go away, look within and figure out if you really want to be a full-time trader or are you just in love with the lifestyle? Because I'm sure we all know those people, right? They're about 50 to 70% committed. They're not really doing everything they should be doing, but they know enough just to kind of feel like they're doing something. Now, what this is essentially going to be doing is making sure that you're sitting around that break-even and inconsistent mark. You're never really going to get and break through those barriers because if you've never been a professional athlete or ran a business before and you've just kind of had a very, very normal kind of life, when you start to learn to trade and you start to lose and get frustrated, and it really exposes a lot of your personality flaws. And for some people, they're simply just not ready for that. So you need to be very committed to the cause. You need to be willing to do a lot of work day in, day out, week after week, month after month, year after year. And it only continues after you achieve consistency. It's not like you just get consistent and then you throw everything out the window. You got to keep doing those things. So you guys have to be ready to commit 100%, and more importantly, you have to be ready to go deep within and be very self-accountable because, like I said, it's going to expose a lot of flaws inside yourself to overcome these emotional barriers that you are probably withholding yourself with. And then also, most people have a kind of subconscious self-defense mechanism where they only want to commit 50 to 70%. And that is because if it doesn't work out, they can say, I didn't really try that hard. I wasn't that committed anyway. So step one, dig deep, commit 100% and actually give it everything that you have. Now, moving into probably the most important steps here, these next few guys, and this one is something that I am so thankful for that I did from day one, and that is a daily process and or routine and tracking that. Now, what I mean by that is you need to develop a very strict routine. Now, this is going to vary from strategy and time zone dependent. So it really depends where you are in the world and how you trade. But to use myself as an example, in Australia, the way that I trade, a lot of my entries are pretty much around that London kind of New York time. All right, but I do my daily watch list early in the morning at around 7, 8, 9 a.m. because that's when the new daily candle forms. So I split my daily routine up into 3 pretty much. So as soon as I wake up, I like to just take a bit of time, chill out for a minute, make a coffee, and then I go up to the office, hit the charts, and then I start building out the daily watch list. Now, this is going to be compiled with, screenshots, analysis of that day, exactly what I'm wanting to watch, and how I plan to enter these positions. All those things are absolutely crucial, and it will make a lot more sense as we continue to go through these steps. But the morning session is very heavy, it's very in-depth, and it's planning out my whole day. Now, obviously, it depends. Some days there might not be much on watch, so it's very quiet after then. However, if it's, let's say, a normal or an active day, I'll get to around pre-London time. And then what I'm going to do then is go back through my previous watch list that I've already done and update and change that if it needs to, if those trades are developing, if they're getting closer. But it's very important during these steps that in all of these steps, you are tracking your emotional state of mind. And if you feel anything, I want you to verbally just spit out all types of information on here. I really don't think there's too much, especially in the beginning stages of, emotional verbiage and just kind of what you're feeling and how you're looking at the markets. You can go too much technically, but when you're just figuring out how you're feeling, that's very, very important. And again, it will tie in. So in the morning, I've got exactly what I wanted to see, how I was feeling, what I like, rating them, all that type of stuff. London session, I do that again. And I just give an update if things are still on watch, if a pair is no longer on watch, and again, just tracking how I'm feeling with the market and just how I'm feeling overall. If there's any FOMO, greed, it's very important that you do this. Now, I also do this before I go to bed, which is around the New York session for me in Australia. And this is just kind of my final update for the day. If I took a position, if if anything didn't develop, if I feel like I missed something, if I felt emotion, it's just the same cycle 3 different times, just giving an update on the market. Now, what this is going to do is it's going to essentially track your whole day of emotions, and it's going to be very key at the end of the week, because we want to figure out if there's any difference between how you felt in the morning and then once that pair started to shape up and start to look good, did you feel an element of FOMO? Did you want to jump in early? And then obviously in the New York session, if that position has ran, then maybe you're feeling greed, maybe you're feeling disappointment, and all those types of emotions are going to be absolutely crucial in order for you to be able to understand and then figure out where you potentially have an issue that you can now look towards and potentially try to fix in the future. But it's very important to expose all of those. And I know it's a lot more focus on technicals, I feel like, from the beginners and inconsistent guys, because that's the fun stuff. But the real stuff, the shit that's actually going to matter to your trading, is all handled by routine, process, and figuring out your state of mind and your emotions towards the markets around positions. Now, moving on here to the second step, which is a pre and post trade checklist. Now, this is just something that can be obviously super beginner or it can be super advanced. It really depends how deep you want to go into on this. I do recommend going pretty deep, but I'll obviously showcase a few little things throughout this video of just what I have as a basic kind of template. And if you guys are interested, I will put a link down below to a Notion template. If you guys are wanting to check that out, feel free. But the main things here is you want to be having very strict strategy guidelines. Now, this will depend again on what strategy you trade, but for me, for example, I need to have things in there such as like a good daily direction prediction or daily bias. The intradays are fitting the strategy criteria. The way that I trade has quite a strict entry criteria, so when it combined with a checklist, it works really well and it helps you avoid unnecessary losses or taking things that particularly are not in your plan. Now, again, I want you to rate the overall setup. I want you to be as detailed as you can. You can do this via tick boxes. You can do this via paragraphs. It's really up to you, but I would highly recommend that you do screenshots as well. And then you also want to do this before you take every position and then as soon as a position is closed. Now, again, going full circle, you'll hear it a lot. We want to be tracking our emotions in here. So you can say when entering this position, I've identified that this setup is a good quality position for my strategy. However, due to the fact that price pulled back very aggressively, I do feel an element of fear that it's going to continue and take me out for a loss. It's those type of little details which in the moment that you've recognized might not, pop or set off any alarms. But when you see that happen time and time again over a large data period, you'll really start to realize, oh shit, like I'm more emotional. And then when price pulls back aggressively, I tend to do X, Y, Z, and it starts this kind of ripple effect of potential problems. And that's exactly what we're wanting to try avoid. Now, we're humans. We're not going to trade like robots. We are going to make mistakes. It's not Pokemon. We cannot catch them all right? You have to understand that. But what we essentially want to do with the daily watch list, the pre and the post trade, is making sure that we eliminate as many mistakes as possible that we can control. So putting up, these virtual barriers that every time we deviate from the plan or make an emotional decision, these checklists, these processes are in place to help avoid that as much as possible. And we're staying within the realms of your strategy's edge, which is ultimately going to help you achieve consistency. So that is a very, very important step, but that is going to move us into step number 3. Now, step number 3 is what I like to call ASR, which is also known as Advanced Self-Review. This was taught back to me in 2015 by one of my really good friends, Lewis, and I have done this every single week and every single month since 2015. I have a lot of data on this stuff, but essentially what we are going to be doing is gathering all of the information that we've taken from our previous trading week. I like to do this on a Sunday. You can do this on a Saturday, Sunday, it doesn't matter. Just you need to be consistent with it and at the end of every week, because if you leave it too long, you're just going to have way too much data and it's going to not be as relevant to you. You want it to still feel quite fresh, okay? Now, we are going to be tracking every single daily routine and process. We are going to go through and figure out, okay, so on Monday, we were looking at Aussie dollar. I can see from my pre-trade that we never took Aussie dollar, so there was no pre and post trade. However, when we go through at the end of the week, we want to be checking out every single entry from that daily watch list process. We want to also be checking out our pre and our post trade entries and checklists. And then what we also want to be doing is comparing those results to missed positions within the market. So to summarize, is we're checking everything that we've done in terms of trades taken, and we're also checking every single missed trade that is shaped up. Now, I would recommend keeping this in a separate file throughout the week, just screenshots, short paragraph, doesn't have to be anything too crazy. You don't need to do 20 hours of office work a day to do this. It's not that hard, especially once you get it in routine. But what that is going to allow you to do is create a performance discrepancy every single Sunday, and then you can figure out, all right, I performed really well, I missed XYZ, I should have taken this position, why didn't I take this position? Okay, so like I was saying before, if on Monday we notice that we never took a trade, okay, why? We go back, have a look at our watch list, it was on watch. When it got to the London session, it was pulling back for an entry. Now that we're at the New York session, I felt an element of fear of losing. I didn't want to get into the position. This one certain thing turned me off. However, when I remove the emotion and I have a look on Sunday, it was a trade that I should have taken. Boom. We have found a very large potential issue within your own trading that only you can find by doing this type of exercise. I haven't met a trader who was able to get consistent with just winging it throughout the market, no journal, no routine, no process, no checklist, nothing. And I don't see that as being a nice way to keep those consistent returns coming in either. So again, that whole week is now wrapped up extremely well, just in terms of us being able to get all of the data that we need, trades taken, missed trade, tracking our routine. And that is going to give us a huge insight into where any potential flaws are coming from. It's very easy to not see these and feel like it's a technical mistake. And I think that's one of the biggest issues that a beginner or an inconsistent trader faces, is they feel like, if I could only just take better positions, if I could take more winners, I'm going to be able to get consistent. The reality is that's not the truth. The easiest way towards consistency is eliminating unnecessary losses, because let's say you take 15 of them per year. Well, if you're risking 1%, you've just saved yourself 15% of capital if you're able to remove the ones that are just wildly away from your plan. So that is a much easier way to become consistent, instead of constantly thinking that you need to learn more technicals, you need to just take more winners. You can become consistent by taking good quality setups over and over again, having a strict routine and process, and avoiding mistakes. It's not the funnest way, and I understand that, but it is the most realist way in order to become consistently profitable, and that should be your goal. It shouldn't be to take more trades. It shouldn't be to just constantly strategy hop and learn more technicals and things like that. It's eliminating mistakes, because when you are trading at scale of like a high 6-7 figure account, you cannot have, giving away 10% a year to these mistakes that you have no idea why. You have to be very militant, and you have to run this like a very strict business if you actually want to make it and trade for the next 30, 40, 50 years. Now, moving on to step number 4, and this is something that I see happen a lot, and I want you to back your own analysis. Now, if you're a part of a paid mentor group, if you watch a lot of traders on YouTube or you follow them on social media, you have to remember YouTube, Instagram, those type of things, they're very much a highlight reel. Okay, so they are not showing all of their transparency when it comes to trading, and they take losses just like everyone else. Hopefully they're legit who you're following and not some sort of scammy fuck, but you get what I mean. Now, what you need to understand is you cannot let other traders' analysis influence your own decisions. You're not going to win long term by doing this. Now, even if that trader says, hey, I'm jumping in Aussie dollar, and you jump in Aussie dollar and it wins, that does nothing for you but a very, very short monetary gain. What you need to be doing is seeing that analysis, identifying it, asking yourself, why are they looking at that when you're not looking at this? If you trade the same strategy, obviously I'm only talking same strategy here, but you're not going to benefit if you're letting their decision making and their analysis influence you, because you need to gain your own confidence. And when you are doing your weekly ASR and those type of things, you cannot put in there, and your mentor or coach wouldn't allow it if it's like, oh, I took this trade because Ben did, I took this trade because this person did. That's not going to benefit you at all. You need to back yourself, regardless of if the trade is a win, loss, break even, it doesn't matter. The benefit that you will get by sticking to your own analysis and learning from your mistakes, because that's essentially what I want traders to do in the beginning phase and the inconsistent trade. Make mistakes, because that's how we learn. If you are just on a hot streak, a winning streak, and you're getting essentially lucky by deviating from the plan and taking positions and they're winning, taking other people's trades and they're winning, it's an edge game. That will run out. That is not going to stay linear, and you're just going to keep going in that direction. You need to figure out what you are doing wrong by making mistakes and being okay with making mistakes, learning from that, identifying them, and then putting things in place in order to actually become better. So to go full circle, what I mean by this is when you're doing your daily watch list, okay, in 3 different sections or however you want to do it, you're doing your pre-trade, you're doing your post-trade, you're doing your weekly ASR on trades taken, your watch list reviews, and then also missed positions. All of that information is going to spit back, and then you can adjust that daily watch list. You can adjust that pre or post-trade checklist in order to help figure out things that you are making mistakes on. So like I was saying before, if you identify that there's one certain criteria, maybe you're trading with a lack of a daily bias, well, the first thing you would be doing is when you're developing your watch list is focusing on a daily bias first. And then when you do your pre-trade checklist and your post-trade, there needs to be some sort of tick box, or there needs to be some sort of rating system of analysis to figure out how good is that daily bias. Is it worth taking, or are you slipping back into your old ways? I understand trading is very hard. It's like the hardest, easiest way to make money in the market. It sounds so simple and it's so easy to put on a trade, but it's so hard to show up every single day, look into your own results, even if they're bad, especially if they're bad, and then figure out what to do from here. You guys need to be figuring out game plans in order to keep moving forward and getting better as a trader. Much like we want our equity curves to be nice and linear and moving in the upwards direction, we also need our dedication, our motivation, the way we approach the markets, and our overall skill set as traders, technical analysis wise and mindset wise, to be moving in that same direction. I think one of the biggest myths are that, oh, you just become consistent and now you just don't have to do anything and it's really easy. There's no point doing all this hard work, getting results, throwing all that out the window. You do what got you those results, and you continue to do that, because that's how you strive and that's how you continue to get better as a trader and ultimately further increase your returns, your results, and your overall feel within the market. And that to me is winning as a trader. Being able to hold consistency for 10, 30, 40, 50 years and have a career or a lifetime of trading profitably, and understanding that realistic expectations play a big part in this. But I honestly feel like a lot of traders that I know over the course of many, many years in this game, if they had have done this from day one, they would have achieved consistency, or it would have sped their journey up tenfold. So don't be afraid of putting in the work. Don't be afraid of looking silly for a while. You have to enjoy the journey, enjoy the process, get in the trenches, learn everything about you, yourself as the trader, and that is going to give you the best way in order to achieve consistency. And honestly, that is my best piece of advice, because you're never going to hear me say, oh, if you just fix this one technical thing, now you're going to be consistent. It's all about you, how you approach it, how you deal with the markets day to day, and how you fix the mistakes that are going to pop up with your own trading. But hopefully you guys got some value from this. Hopefully you can go away and start to implement some of the things that I've talked about. I really do feel, and it's close to my heart, that there's no way you can do this and not become better. So make sure you guys go away, implement this, get better, keep learning, keep hustling, and just keep pushing through those mistakes. And if you really want it, and you really want to become that trader, you can. It just takes a lot of hard work. But guys, thank you so much for watching. And as always, I'll see you in the next one. Take care. Bye, guys.